So basically, it's just us learning how to identify support and resistance. Yeah. Then the other thing is, you can't know when the market is going to change. You will never know. It will just change on its own. So us learning predicting can also cost us. So the best thing you can do is just wait for the market to paint, whatever picture it's going to bring in our face. But so yeah, we're going to basically talk about support and resistance. Yeah. Support and resistance, and yeah, basically I think just that support and resistance. Yeah, so that we will understand, we will know how to identify. Support and resistance is the easiest amongst all of them. The easiest to identify because it's literally okay. Support and resistance actually comes in quite different ways. So there's others use trend lines. They use trend lines and channels. It's all the same. So trend lines can be used in form of this. If you see an area where it's bouncing to the upside, I don't know. I don't. Is this horizontal or diagonal? What's this? Horizontal or diagonal?
This one is this is not horizontal.
Okay.
Horizontal has to be flat.
So now the thing is, the best way you understand it is you understanding the horizontal part. Because support and resistance is this, basically this. The best way to identify support and resistance, you can tap on the line chart. Then you look at, for example, if you focus on this price area, you focus on these tips. So now you connect just tips because this is just getting the what is the close price. Yeah. So this you do the same thing, but it's just like a line, or rather a zone. Yes. So I also connect the ones which are down. Then I'll explain it on exactly what I mean. So support is this, and resistance is this. So resistance you can actually take it as a rule. So resistance is an area where price has failed to close above that area, or rather failed as the price has failed to create a new higher high. There's just held price held in that specific area and continue going in that area. Again, in support is the opposite of resistance, where price has failed to break that area. And most of the time, you can identify support by it touches, yeah, basically different. If you see an area where it's bouncing this twice in that same area, you're able to know this is support. So there are a lot of areas in support. You can identify support literally on any time frame. So it's literally found on any time frame. So this is the horizontal support and resistance. So now there's what's called trend line and channels, rather channels. They can be used to also identify support and resistance. So for them, for trend lines, if it's an upward trend line, on an ascending trend line, it's a trend line which is just it's connecting higher lows.
Okay.
Yes, just connecting higher lows. Then you'll be able to identify. So you can use trend line to make your entries. Yeah. Based on what we talked about previously, you will know that okay, this is if you can remember, that, then you know okay, this is what a trend line is. So a trend line, you can if you don't want to have issues with trend, you can also use a moving average. So you can use a 30 move, 30. Let me just Yeah, you can use the 30 moving average. So basically, um, yeah. So now, what I want you to learn using this app, actually, is you should be using more of this to identify areas of. If you want to know what direction the market is, you want to know whether it's trending or it's going down, you should use this moving average. Then just one. Don't use it for anything. Just use it for your identify.
This one, okay.
Yes. So depending on the time frame you are in. So here, when you see price, when you see the moving average is above price, or rather the moving average is below the actual candlesticks, you should know that it's going up. You will actually know if it's this side, because this moving average will never can pass this side. It will pass through price, then continue going up. Just same applies if it was going down. As soon as it crosses, it's a trend change. You get? Hello?
Yes, I'm hearing clearly. I'm following.
Yes. So when you see a moving average passing in price, and it has in this case just like before it passed the price and started going up. It's a sign that it's now in an uptrend. But the thing is, moving averages or other indicators they are lagging. They're not leading indicators. They're lagging indicators. So you need to be ahead of price. That's why now you just identifying higher highs and higher lows is going to help you. So if you want to really understand trends and you knowing that okay, the trend is it's still going up or down, you just identify it. And of course, you looking at the bigger picture is going to help you. So in this case, there was this high which was created here, response at this price at this level. There was this low. I'll spot out all the two levels so to understand them properly. There's this level which was here. There's also this level which is here. There's also another level which was expected, which is here. So yeah, I will start painting it in form of a story. So look at how price started from here. It went downside, going down aggressively to the downside, aggressive, and it managed to break this lower low. Managed to break this lower low, which is here. After breaking this one, went down, created the new lower low. Then now, the time it came up the upside, the thing is, as long as price doesn't uh, close above these highs, we still know it's in a downtrend. So in this whole time, the time is here in this section, it is still in a downtrend. But
Yeah.
obviously, we know that just price breaking this high was a sign of things are now about to change. But as long as price hasn't, like in this case, price actually tapped in this area, uh, price tapped in this area, then actually went down for quite a good number of days. Then after going down, it came back down to break this coil. So just after this break, we're able now to tell that the market has changed direction. So when you're analyzing, when you're spotting out trends and all, you should be able to at least paint a picture, create a story from what you're seeing. It's not even about you drawing these lines and all. It's just you understanding uh, why everything is forming. When you understand why it's forming, why it did whatever it did, it's going to help you understand. It will give you an edge. If you knowing that okay, why did price break? This it touched here, went down, and obviously after it came in, there was no much liquidity for it to go down. It failed, then it broke, closed above. So when it closes above, usually it becomes a retest, which it did. It came for a retest and continue when going up. So that's basically you. You just understanding the whole, you painting a story of what you are seeing is going to help you. So trends identify lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Just like if you understand that whole concept of higher highs, higher lows, lower highs, that whole thing, it's going to help you identify whether it's going up or down. So the thing is, let me just write them so that you see how the market changes. So this is, I mean, not a higher, it's a lower high, the lower high. So this was a lower high. This is also a lower high. Then this one is also a lower high because it did not close above this high. It's a lower high. Then now there's a bunch of lower lows which are down here. There's this lower low which is here. There's also another lower low which is here. Then now, instead of price closing above, it created a new what? A new lower high. A new higher low, I mean, higher low. A new higher low which is here. Then again, a new higher low which is here. Actually, these are like equal highs, equal lows. Then again, it created a new lower high which is here. Then it created a new, instead of creating lower highs, these lower highs, both of them broken, to create a new higher high. Oh, sorry. Yeah, so new higher high. Yeah, this high, which is yeah, a new, it's called a higher high because it's a higher than the previous. So yeah, so then again, there's this high, this high closed above this. Yeah, slightly actually, yeah, slightly above. Yeah. Then again, another high was pink. Then now, price is still forming, so you can still make use of this high which is here, the high which is here. So this though it's not really clear, but you can yeah actually identify it as a high because it retraced for a bit before breaking that high. So now the thing is, this is called the lower high because it's lower than the previous low. So this is called the lower low because it's lower than the previous. So now this when this low is broken, when the lower low is it creates a new lower low, which is this. So if this low was broken, it creates a new lower low. So in this case, it did not break. Instead, it started going to the upside to create a new higher low, a new yeah lower high, I mean, lower high and lower high. Because this high is lower. This high, or I mean this high is lower than the previous high. Similar to this one, this high is lower than the previous high. And now, after holding for some time, price broke. It created when when price breaks lower high, it forms new higher highs, which are these. This is a higher high because it's a higher than the previous lower high, but it's still a lower high. So this one
Yeah.
because it hasn't yet broken this whole chain, you know this whole structure which is here hasn't yet been broken. So as long as it hasn't yet broken here, on a lower time frame, these are higher highs, but on this time frame, it's still a lower high. You get the concept?
That's too low.
Yes. So if you go on a lower time frame, it's a higher high, but on a lower time frame, it's a higher high. But when you go on a higher time frame, it's still a higher low. So now after this whole thing, if you look at these highs which are here, you can call these as equal highs actually. So you can use this level as the level of you can actually mark it as equal highs. So yeah, these are actually abbreviations for, so we can
Okay.
put that at an equal high. Let me so these are equal high. Let's come back to this previous level of interest which managed to break this lower high. So after this whole, price holding, it created a new lower high, and this lower high, it did not actually, it did not, it actually reversed. Okay, the only way you can identify the lower high is after price has reversed from that area. That's when you'll be able to know, because you can't see where it's a lower high or not if it hasn't yet reversed. In this case, after reversing, that's when you know, okay, this is now a lower, a higher low. I mean, this is now a higher low. Then now, this higher low is the origin of this break of structure, this structure break, which is here. So this whole break of structure, this whole break of structure came from down here. So down here, that's when now you come to now make use of support and resistance. So this is an area of support because price came to this area, respect actually the first area you can actually spot is this one here. Yeah, this one. This area here. Price respected quite for some. If you go on a lot of time frame, you see that this level is tested. So a level of support is an area which has been tested several times and price has failed to break. Has failed to break that level. So like I said, you can take support as the floor and the resistance as the roof. So this is also an area of support of resistance because price did not break above. Price only broke above at this. So in this level, when after price broke, this level turned into resistance, which most of the time if you talk about retail, I mean when you talk of retail type of trading, that's what it says, you know, support turns into and resistance turns into support when it's broken. Which sometimes it applies, sometimes it don't. In this case, it did not apply because it actually broke went down to a place of origin, which is in this area, of support. That's why there were a lot of liquidity to actually push the market to high. Not here. Here it was just like like in the middle of nowhere. Yeah. So that's just basically about that. So you understanding this whole, if you've seen the way we've just started from here, started going up, you understand. You just painting a picture of what's happening. What's just happening is going to help you. You painting a picture, a story, writing it down in your mind. It's going to help you know. Okay, it's doing this. And normally, when it creates a new higher high, such and such a thing happens. When it creates a lower high, such and such a thing happens. You get.
Okay.
Yes. So I don't know if there's any question on that, or maybe I should again clarify more on support and resistance.
Okay. On this, the confusion that I had, especially on identifying the support. Me, I thought like, have you seen this line that you've drawn as a lower high?
This one.
Yes, this line,
Uh-huh.
the same line where you put the, yeah. I was thinking maybe for me to find the support, you should be able to touch these from the first point there all the way, all of them should be touching there. But now that you've explained on how to identify it, like where you've touched here, it's now making more sense. It's just the point where the market was failing to break several times.
Okay. Okay.
Now I'm able to get that point.
Oh,
That's
all
where you
right.
start to find the support. Then the other one that you've mentioned is also when you're able to identify the low high, the high low, even the lower low and the high high, all these areas also they can help me to identify as to which point we have the frequency of the bearish and the bullish failing to break.
Oh, okay, okay, yeah. Okay, yeah. So basically, that's all about structure. So you understanding this whole structure is going to help you, especially you understanding the high time frame structure. You understanding this is going to help you scale down to a lower time frame and now look for better entry. So if you know that okay, this is a level, remember this is a 4 hour chart. So there are a lot of opportunities when you scale down to lower time frame because this is just helping us to actually understand this is this is what I'm supposed to be looking at. So in this case, when you just see okay, it's breaking, it has already broke. It broke this lower high, which is here. You will know that I'm now no longer looking for sales. You're looking for buy because you have this is it's more of, if you take it in scalping, if you take it more of scalping, it will be like which is an investment where it's supposed to pay you long term. So you going for counter trends is going to it's like gambling. Trading against a trend is gambling because it's buying and you want to sell. You can only do that if you actually understand the structure. Like in the case of which case can I be? In this one, if you bought, let me just make an example. If you bought from here, if you bought from here, and your targets are here at this lower, I don't know, maybe the reason of the analysis or whatever. Okay, let me know. Okay, let me just give this one. This one will be better because it has tapped here, so you can use that as actually the reason for entry. So in this case, yeah. So you enter from here. Your targets are this high, is this, it's this lower high. Then as it's going up, you spot is this. It comes, comes, taps. You identify this. You take this sell. The reason why I'm taking it is one, first things first, you're already deep in profit. You're not losing anything. Whatever money you're going to lose at that specific time is in the profit you are making at that time. So you getting a counter trend when you're already in a trend of the overall direction, it's going to at least help you. It's going to be an advantage to you. Not it's going up, you have no trade, then it goes. It's like it's buying. You haven't opened any trade. This is the first trade you're taking. Then you want to take a counter trend. What if it goes opposite? Then you're screwed. Your account will be blown there and then instant. Because maybe you might think that selling is going to hold, only to realize it's just like a minor retracement. Then after that minor retracement, it continues going down. It continues going up. Then you say, no, I was scammed. You know, you end up saying I was scammed. Hello?